Hi guys, Henry here. So as the year comes to an end, I just want to look at just a quick review on the stock market and looking forward into 2022, what might be some of the options. This doesn't constitute as financial advice, but that goes to your professional, and all these views are my own. So what have we seen in 2021? US software again having a record year, up 32.9%. The S&P as of December 15 was up 25.13% year to date. Now, I've read a report out, it's on the blog investmentforexpats.com. It's in a mail shot to all the subscribers as well, just going over a bit about the analytics. And on that, what I've done is stated having a look at Microsoft's income statement and looking at its total revenue and its gross profit in 2021, 2020 and 2019 in correlation to its share price. Now, Microsoft is actually quite a conservative example for a lot of the big tech companies, Amazon, etc., and even taking it to the extremes like Tesla. But what we've seen is the share price go way over what the gross profit has grown within those substantial years. So it questions, are people actually looking at the balance sheet, the income statement and the cash flow anymore, or are they too irrelevant when they're looking? And is it more kind of retail, just trying to push it up because they've got nowhere else to go? They haven't got bonds, are yielding quite low. So, and people, they've got the eToros, they're pushing it up more than ever. Is that the reason? I don't know. So I written in the blog that I expect tech stocks that have already priced in the earnings in the share price to be somewhat stagnant in the next 2 to 3 years, because their potential growth has already, or share price has already factored in at that growth. Now, in terms of value stocks, what to look for, I've mentioned Philip Morris. It's had a bit of a turnaround. Tobacco, it's been shunned away. It's looking more into the health sector, ironically, as well, and has took large mergers in that. Also talked a bit about oil companies and their transition and how kind of the ESG push has left them away. But if you look at oil companies, they're paying good dividends. So for those looking for a potential income investor, may be an option for you. And other region and sectors to look for, when you look at the worst funds, I was looking at Bailey Guildford, one of their trusts, the one that had a quite substantial year in 2020. The China investment trust was one of the worst performers. When we look at that, it had the Evergrande saga, Evergrande, also the education sector. Now, without going into too much detail, we had President Xi's kind of wanting to bring more equality to China. Now, the way the CCP works, if that's what they want, that's going to happen. What that means for the average Chinese company or consumer is that they're going to have income upgraded. So the average GDP is going to go more. What does that mean for the average Chinese company? People are going to spend, and trickle-down economics is going to happen. Unlike what we've seen in the US, where trickle-down economics is the rich get richer. Bezos may add another 20 billion to his net worth. That doesn't really factor down into the overall economy. When it does is when you've got China kind of with an average GDP of around $11,000 per person. If that grows by 20-30%, then you'll see the benefits for a lot of Chinese companies internally. And we've gone in to have a look at that at the report. Also, some other factors looking away from equities is bonds. So bonds in places like emerging markets, such as Poland, Eastern Europe, tend to stay away from Latin America. So a good active bond fund may see a resurgence in 2022. And also we touched upon demographics. So how to make use out of that, look at the aging population, healthcare, biotechnology, healthcare, and also kind of benign, may seem a bit benign, but sectors such as funeral care as well, because obviously with an aging population comes more death rates. So having a look at specific countries at that. So hope that finds somewhat useful for you in 2022, and best of luck for your investing.